Hello, I'm John Goodhue.
And I'm Brian Gray. We're the founders of APO Financial based out of Denver, Colorado. We're welcomed here today by renowned author, speaker, educator, Roger Ibbotson, who's the founder of Zebra Capital. And we're very glad to have you. Thanks for being here, Roger.
Thank you, Roger.
Thank you.
Appreciate it. It's an honor, sir. I've read lots of your material over the years, and seriously, it's an honor to be with you today.
Absolutely.
So, Roger, our practice is based in Denver, and we're all primarily a retirement firm. That we do comprehensive retirement planning. And over the years, working with really professionals and business owners and executives in corporations, what we've identified is really that they continue to make mistakes. They continue to believe myths about retirement planning and finances. I believe in some of your writings you call the myths folklore. I think that's what term you used. And so we've identified the top 10 of those. We've created a white paper about that and a report that we give people. And today we can't talk about all 10. We'd like to talk about 2 or 3 of the top ones. The first one that I think most people would say is on top of mind going into retirement is their fear of running out of money. And because we're living too long, healthcare costs. And so just in that one area, what do you see some help for people?
We call it longevity risk. You don't know how long you're going to live. That's the real problem here. And so if you can get stable income for the rest of your life,
yep,
that would be a wonderful thing. And actually, these annuity products do that. So,
yep,
so I think annuities actually serve a real purpose there. They do take care of that fear directly.
Yep. So when you look at the annuities there, you've created the Zebra Capital in partnership with Nationwide. Tell us how that came about.
Well, it's also in partnership with the New York Stock Exchange. Mm-hmm. So we put a lot of different people together here, but mm-hmm, essentially we worked with Nexus and SureWest and so forth, yep, in order to a lot of parties, but there was a demand because we were actually working on popularity products. Yep. We buying less popular stocks. We could see that they did better at less risk. And one of the big advantages of an insurance product is if you can deliver an equity product at low risk, that is the ideal thing for an insurer, because these fixed index annuities that Nationwide actually has, yep, in their New Heights product, these they're actually guaranteeing it so you don't have any negative returns. But in order for them to give this guarantee, yeah, you've got to start with a product that has low risk. And the NYSE Zebra Edge Index is designed to have that low risk.
Right. And so you'd mentioned your unpopular stock concept within your Zebra indexes. I find that intriguing. It's actually pretty funny when you think about it and the way you describe it. Could you describe that just shortly about kind of your thought process about how you came up with that idea?
Well, of course, most people talk about stocks all the time, and they actually talk about the same stocks, the hot stocks.
Right.
And if everybody's talking about that stock, they've already bid the price up. And the real winners, the real best returns are the stocks that are overlooked. And ironically, because this is different than the risk-return relationship we find in everything else, ironically, those stocks that have been overlooked not only end up with good returns, but actually they turn out to be the low-risk stocks.
Wow, I've looked at a lot of your research and all, yep, about this, and I was amazed, quite frankly, yeah, when looking at, because you're the research guy, right? You're Mr. Data, you're Mr. Research. You know,
that's right.
I don't think you have any opinions because everything you back up is with data and research. And so, looking at your charts, it was pretty amazing to me that you call them cool stocks, the cool and the hot stocks, they really outperform the hot stocks over time. They're less risky. I mean, it's counterintuitive, or at least it's counter myth.
It's so counterintuitive that we had to think of a name, yeah, cool, because people don't want to buy those overlooked stocks.
Right.
And that's why they're so attractively priced, because people are not interested in them. And so, of course, the people are interested in the hot stocks. What do you want to call them, though? So we first call them the unpopular stocks, but that doesn't sound very interesting.
That's like the unpopular kid in school, right? Yeah.
So we actually had to call them the cool stocks, which they are really cool because they end up being overlooked, but also being low risk with potentially higher returns.
Right.
And history's been on its side. But, it's a great insights as it relates to unpopular stocks or cool stocks versus hot stocks. But the number two surprise or myths in retirement has to do an awful lot with taxation. And what we found is a lot of people actually ignore the actual tax impact on their investing and ultimately the tax impact on their deferred money, being IRAs or 401ks, as it relates to their drawdown and ultimately their income plan. Can you talk more of your opinions?
Yeah,
on that?
I think taxes are really critical, and because we care about returns, but really it's ultimately after-tax returns that matter. And not all things are taxed the same way. There's so many differences in how you approach this. And actually, fixed index annuities have the advantage of they're deferred all the time that they're accumulating.
Right.
So that's what they have, that general tax advantage. I mean, we can certain things in some instances you can avoid taxes. Mostly what you can do though is at times defer taxes.
Right.
And deferral is actually very valuable because you actually avoid, we'd call it the interest on the interest. You don't have to pay taxes on it twice.
Right.
You only pay tax, you will have to eventually pay taxes. It doesn't avoid the taxes, but by deferring it, you're only going to pay taxes on it once.
Absolutely.
Right. Yeah. And we see people, nobody likes, or most people don't like paying taxes, but in retirement, we think it's more important. Well, it's so important because every dollar you have to pay in tax that you might not have to have paid in tax, it's a dollar we don't get to use for our lifetimes. It's a dollar we don't get to pass on to our families or to charities. And unfortunately, we don't see many people that do real forward tax planning for the rest of their lives. And it's such a big deal. That's a big part of our practice, is really focusing on the different advantages of tax planning in retirement, because it helps in the income planning side of things. So what would you say to people that going into retirement now, who a lot of times when they think safety, they go to bonds? That's what they've been taught. What would you say to those people today?
Historically, bonds have done very well, and that's because when interest rates drop, bond prices rise, and essentially you get your return on bonds from the yield and the capital gain or loss from bonds. But historically, it's been a gain in the last few decades. That's not likely to be the case in the future. You're not going to get that gain. You're already starting out with a low yield, and if there's a rise in interest rates, you will get a capital loss, not a gain. So bonds are not a great investment. They do diversify the stocks, but we really need a lower risk investment that to substitute for those bonds. And actually, I do think also that fixed index annuities serve that purpose because they're essentially a accumulation product that is insured, in this case by Nationwide, insured on the downside so that you give up some of the upside, of course.
Absolutely.
But, so you won't get the full return of an equity, but even though you give up some of that, you get part of that equity participation, which is really great, and you can't lose. So I think it's really does fill this need for investors. And particularly as they start approaching retirement, the beginning of retirement, that's when it's really, if they happen to hit a downturn right before that, it can affect them for the rest of their lives.
Right, that the sequence of return risk that we're talking about.
So looking at a fixed index annuity as an alternative to a bond asset class is something that people can consider to at least get some decent returns without the downside risk of going backwards with rising interest rates. So
yes, and actually, I think I could say that they even do better. I would. It's a prediction, of course, because we can't say. Of course, bonds have done great in the past, but that's because of those falling yields.
Right.
But when you start out at such a low yield, it's hard to have it fall further.
And we've been watching interest rate cycles, which typically run a 20 to 30 year cycle over the last couple hundred years, from what we've seen. You agree with those cycles?
That is surprising, but there do seem to be these interest rate cycles because stocks are more random, and the bonds they hit their high yields in around 1980, 1981, and they've been kind of dribbling down ever since. And so, but before that, from World War II on to the early 1980s, we had kind of a dribbling up rise. So yes, they do get these cycles. But this cycle, this downward dropping of bond prices seems like it's over.
It does seem that way.
Absolutely.
So a little personal question. You've accomplished a lot in your life. What keeps you going? What keeps driving you? And then kind of what's next? I know you've got to have something on your drawing board if you can, I don't know if you can talk about it or not, but what are those things? What keeps driving you?
Well, this finance is such a fascinating field. Investments is a fascinating field. It's actually, of course, you have to like numbers, I guess, as I do, but
Yeah.
but
Right.
it's it's one of the most intellectual jobs you could actually have.
Yep.
Talking about the economy and talking about financial markets and all the interrelationships of these markets.
Yeah.
I mean, it's what would you rather sit around and talk about? I mean, so in some sense, it's working on what you would naturally want to do anyway.
Right.
Absolutely. And for us, taking your research and building portfolios and helping people with their retirements is one of our main focuses.
And actually, I got to say this.
Yeah.
I actually enjoy the fact that we're helping people.
Yes.
I mean, that's a big part of this, because, and not only retirement people, actually, even my students, they're grateful, and it's that's probably one of the most fun things you can have in life, is to have people thinking that you're really helping them.
That's right, and know you're really helping them, because that's what drives us in our practice, is we know we help people, and every single day. So that's the big thing. Anything on the drawing board that you can talk about? Any next projects?
I'm so into the popularity angle right now, and I'm writing on that and more on that, and I'm not ready to release the next project yet,
Okay.
but to me, this is an ongoing idea on popularity, because there's so much research yet to be done and different ways of applying this. So I'm not moving to a new thing quite yet. I'm really in the midst of the marathon here.
Okay, well, we'll be looking for the next things, okay? Well, Roger, we really appreciate you being with us today.
Yeah, you've provided some great valuable insights to our readers.
It's been an honor, sir. It's been an honor. Thank you so much.
Absolutely.
Thank you.
So as we've talked about, and you might have noticed, and you might have encountered, there are a lot of myths and mistakes people make in retirement planning. We've created a white paper we've referenced to. It's basically the top 10 myths and mistakes people make. It really makes the difference between living in a lifestyle without boundaries and living a lifestyle you have to watch. And we prefer living a lifestyle without boundaries with our clients.
Absolutely. So it's important. So if any of this intrigues you, please contact us at the links below, and we'll be more than happy to actually send that out to you. And we definitely appreciate your time watching. We hope you actually profited from this message, and we appreciate your time. I'm Brian Gray.
And I'm John Goodyear with APO Financial out of Denver. Thank you for watching.